What's up, you guys? It's Rob here. Today we'll be talking about ticker symbol AMC. We'll cover it on the daily, weekly, and monthly time frame in anticipation for tomorrow's trading day, May 18th, 2021. We'll cover the charts through Webull. We'll cover the short interest through Ortex, and then we'll also cover the short ETFs through Stock O Tracker. And then we'll talk about the Market Watch article that was actually published today that wasn't a piece of FUD. Surprise, surprise. Market Watch actually published non-FUD. What? But before we dive into this and get too really technical and detailed and into the weeds, hit that like button, hit that subscribe button, make sure that you ring that bell for me because it really helps me out with the YouTube algorithm, and just demolish it because AMC had an absolutely phenomenal day for the trading day. Like, we literally are on a bull run right now and we're just running with it. So just keep that in mind. But let's hop on in the charts and we'll cover it from the daily time frame and then we'll work our way out. But if you guys have any questions or anything like that, just feel free to drop a comment down in the comment section below. Okay, so taking a look at the chart here, this is the 1 day, 1 minute time frame. So it's really the tale of two halves. It's just like we had essentially on Friday. The first half of the day, the bears definitely were in control of the stock. The second half of the day, I would argue that the bulls were in control because in the first half of the day, we saw our intraday low and we also saw our intraday high. However, our intraday low was at $13.39. And you would think that would occur somewhere in the middle half of the day when we had this transition. No, it actually occurred during the first minute of trading. We did get our intraday high of $14.38 here in the morning, but then we set lower highs, which is not a good thing to do. It is a very bearish indicator and shows that the bears are in control of the stock because you have a descending level of resistance, which you can see right here through pretty much half of the trading day. And we had a high of 1438 and then we made a high of 14, let's call it 12-ish, and then we made another high of 1402, 1405 kind of thing. So we're not making higher highs, we're making lower highs, which is not good because what that would mean is we're also making lower lows too. So we had a lower low and then we had a higher low and then we had a higher low. So it's kind of, you could see the fight going on here, but I would personally call this bearish territory because we spent a good amount of the time below the VWAP, which stands for the volume weighted average price. And when you trade below the VWAP, that's often a bearish territory versus trading above the VWAP is a very bullish territory. Now, really, when the things changed was really sitting here at about 145-ish when we had a low around 1357, and then we started moving back up. And you can really see that we made these higher lows, which is really good for the stock and shows that we broke above the VWAP and we closed above the VWAP, which is a very good sign. We closed at $13.95. Now in the after hours, I'm going to pull this up. The after hours literally makes today's movement look like we consolidated the whole entire day because the stock literally closed at $13.95 and closed the after hours at $15.50. $15.50. It's insane. Now, keep in mind that this is in the after hours, so kind of take it with a grain of salt, but it definitely will make things interesting headed into tomorrow of where do we open up at? Do we open at that $15.50? Or do we gap down at the pre-market down to $15? Do we test $14.54 somehow? Like, where are we going to be tomorrow morning? Because right now we're definitely in not very charted territory in the recent times. I mean, we can really only say that we've been at $15.50 essentially like twice this year if you keep that in mind. Like, we really saw it during the squeeze and then now that was really it. So that's definitely how bullish we are moving right now, guys. You got to keep that in mind. Now let's hop out here to the 5 days and take a look at this. So 5 days ago, well, this is 4 days ago. Come on, Webull, work with me here. All right, well, 4 days ago, pardon me here, but back on the 12th, we were trading at $10 on Monday. Now we are trading at $15 in the after hours. That is insane movement over the past couple of days. That just shows how strong Thursday and Friday were for this stock. Friday felt like just kind of like a day because we opened higher and we closed lower. So technically it was a red candle day versus a green candle day, but overall, Friday was still definitely a good day for the stock because we closed higher than what we previously closed on Thursday, which is good. That's really what you want to look at is, are you closing higher than your previous day? If you are, you're headed in a good direction. If you're not, then you're technically in a bearish direction. So you got to keep that in mind. But really, taking a look here at the MACD, we're incredibly overextended. Our RSI is sitting here at what? 61.73, so we're approaching overbought territory. We definitely were overbought during the after hours today, which doesn't surprise me in the least because we literally ran 11% in the after hours. That's crazy, just absolutely crazy, guys. So let's hop out here to the 1 month time frame, and you can really just see just this 1 month time frame. Oh, I moved my support line here. In this 1 month time frame, you can see how much we've moved. Back here on the 6th, we had a low of $8.93. Today, we had a high of $15.80. You could almost double your money if you bought a share on the 6th and sold it today. Almost double your money. Like, that's insane. Now, keep in mind, I'm not a financial advisor. None of this is financial advice. Take everything what I say with an absolute grain of salt. So please do that. Please do your own due diligence. Please do not use this video to make an executive decision to invest on a stock yourself. Do your research because it will give you high conviction within your stock and will help you a lot more. But highlighting here, the RSI and the MACD are incredibly overextended. And when I say incredibly overextended, this is just insane. Our implied volatility today, coming into the day, when I was looking at the options contracts, was around like 200%. That's crazy high, guys, crazy high. Our RSI is sitting here at 82.20 in the after hours. So we definitely need to cool that down, and we definitely need to cool the MACD down a little bit. Because if we can cool both these indicators down and try to bring them back down into the 70 to 30 range and bring the MACD at least down so it wasn't so overextended, because I mean we have a huge divergence of the signal and essentially the MACD here. We have a huge divergence. We're really far above the equilibrium, so we are definitely in very volatile territory. Now this doesn't surprise me in the least because today's move plus today's after hours equates to about an 18% move, which is really huge. The last time that we saw a move like that was on Thursday, so keep that in mind. But the next thing I really want to do is I want to hop out here to the day time frame. Take a look at the day time frame, and this will just give you guys, keep in mind the day time frame does not include after hours, so that's the whole reason why you do not see this candle above 1454. But you can really just take a look here in the past, essentially. Let's do the year to date actually, because year to date's a really good time frame. You can really see the past time that we were at this $15.50 mark. I'm going to draw a trend line out here. So 1550. That's 1547. So we were once, and then we closed this, we traded within this candle. So we have one time rejection, rejection, rejection. So we've only been trading at this level 2 times. So keep that in mind. And this was the squeeze when we hit $20. So we are definitely well on our way there. So just be patient, guys. Keep in mind, the stock market the stock market is a device for transferring wealth from the impatient to the patient. I almost got it backwards. But just keep that in mind, because that's really what the stock market is meant to do. Is those who are patient will see a far better return than those who are often impatient, because those who are impatient don't have the long-term point of view. Keep in mind, I'm also a long-term investor too, so that's just personally my opinion. I'm not a financial advisor. None of it's financial advice. Take everything what I say with a with a grain of salt. Sorry about that. So, all right, now let's talk about Ortex here. So, Ortex, we saw a negative short interest change of 3.79%. We did see people borrow shares today, which is a huge thing to talk about. because that means that shorts may, yes, be covering because we do have a negative short interest change. We may also see the shares that are on loan that aren't established short positions being returned because they don't want to establish a short position because it's too risky for them to do so. You got to keep that in mind. So our borrowed shares today was 2.43 million, and our return shares was 8 million shares. 8 million. That is a lot. Our shares on loan as of 7 days ago was 153. Now we're currently sitting at almost 47. That's a drastic change. Our days to cover has gone down a little bit. It's down to 1.57 versus 1.68. Let's take a look at the 2-week time frame. So the 2-week time frame, we're looking at 1.58 right now. So not terribly bad. And it has been higher, but keep in mind, today, if we look back here at Webull, we traded 158.93 million shares. And then on Friday, we traded, what was this, 200 million. And then really on Thursday, we traded almost 300 million shares. So you got to keep in mind, really the past 3 days are going to skew this number because our volume has been drastically higher than what it has been for such a long period of time. So let's go back, hop over here to Ortex. The cost to borrow fee average is sitting at 22.97%. The cost to borrow max was 49.88%. This is still incredibly high, and it makes it incredibly hard for the shorts to be profitable because this cost to borrow fee being so high, they have to pay it up front, and you have to see roughly about a 25% return to see a positive return on your short position within AMC right now. And that's if you got the average. People have gotten the max and people have also gotten the minimum too, so keep that in mind. Now the next thing that I really want to talk about is the short ETFs. This is really huge. So the short ETFs are sitting at 9,782. We saw this number actually creep down during the day. So we did not only just see shorting through the stock, we saw shorting through short ETFs as well. So you got to keep that in mind. They can short the stock through the share directly and then through ETFs as well. Now, according to Stock Tracker, there's 1.4 million AMC shares that are available to borrow for a short position at a 24.1% borrow fee. Keep that in mind. 9,782 are short ETFs that are available to borrow. And then we also have 138,220 open interest contracts for AMC currently in the money. $14, we put another 16,000 of those in the money. You want to talk about building a snowball? Rolling down a hill and putting more snow on it to get a squeeze and just essentially knock all these hedge funds out because they're going to get margin called. That's what we're doing right now, is we're putting a lot of snow on the ground in front of this snowball and we're packing it up, especially if we can get above $15, because if I'm correct, we look at the options chain here. Yeah, the $15 strike, we're looking at 25,000 contracts becoming in the money. That is huge. If we got the $20, it would be another 37,000, which would be a significant change in our open interest. So you got to keep that in mind. If we just continue going up, the more and more the hedge funds are going to have to delta hedge, and the more and more shares that they're going to have to buy. So what we might start seeing is a gamma squeeze leading into a short squeeze. Wouldn't surprise me, so just keep that in mind. Now, the last thing that I want to talk about before I let you guys go, and I apologize about being incredibly long-winded, but AMC, this article that Market Watch put out, AMC stock rallies towards 7th straight day gain. The last time the movie theater stock had a 7-day, essentially green streak, was July 17th of last year. The stock had run up 44.2% over the past 6 sessions, which was the longest win streak since the 6-day streak ended July 31st. It's crazy that you got to think about. AMC hasn't been essentially green for a whole entire week since last year. That's really odd. And if you think about it, the shorts were hammering it into the ground. It's just my personal opinion, but if you guys have any questions, concerns, or anything like that, feel free to drop it down in the comment section below, and I'll see you guys in the next one. Peace.